What's up, guys? Welcome to Roensch Capital Charts. Today we're taking a look at Nvidia stock, ticker symbol NVDA, on a variety of time frames in anticipation of the next trading day, Wednesday, May 29th. All right, guys, Nvidia stock here today up $74.32 per share. That's plus 6.98% in regular trading hours. It's up another 11 points here in the after hours. Listen, as much as the bulls are going to be thrilled, take after hours with a grain of salt. I say this every day. I say this 98% of days when volume is very low in the after hours. Volume is low today. Take it with a grain of salt. But, of course, the majority of the move happened during the intraday session, so it's hard to argue that. Let's take a look and get as good of a feel as we possibly can heading into tomorrow, pulling out everything, all of the bias the market gave us today. Now, fundamentally, Nvidia has been, and in terms of guidance, which is arguably more important in this environment right now, Nvidia has been a monster. It didn't hurt today. I mean, we got news here. The news actually came Sunday, but either way, we have news. First trading day back. Elon Musk's XAI, his artificial intelligence startup, said that they raised $6 billion in a funding round. And we do believe that Elon plans to use Nvidia chips for a new quote-unquote supercomputer that they will use to power XAI's chatbot. So with $6 billion burning a hole in Elon's pocket to buy as many chips as they possibly can to do it up big with their chatbot, obviously investors are looking to Nvidia for that, hence up 7% today. At least it didn't hurt. So let's get started here, starting with a peek under the hood, beneath the waves with the volume profile analysis on the 5-minute chart. Listen, if you're new here, by the way, Nvidia is a daily upload, so welcome. I hope to see you subscribe to the channel. I appreciate you doing so. I'll keep the Nvidia videos coming daily, and I hope you appreciate the analysis and find it helpful. So you might be wondering, what are we doing here? I'll explain. We're really looking under the hood to see, okay, we know what happened in regular trading hours. We know what the price action was. We know what the result on the day was as far as price, which ultimately is, yes, what matters. But the truth is there's so much more information to be had by peeling back a layer of the onion and looking at the volume profile. Not all moves are created equal. If we look here, okay, in bulls, obviously we would like to see some bullish bias today. It's a 7% green day. Now, if we compare volume off the open to Friday we had about 1.65 million shares in 5 minutes off the open. Today we had about 2.5 million. That's a little bit more in terms of increase from Friday that I've been seeing across the market. Of course, I'm looking at a lot of stocks every day. But you have to understand that we've seen an increase in volume pretty consistently today on most tickers on the open. Okay, Nvidia just happens to be out of context to the upside in terms of it's a larger percent increase on the first 5 minutes than what I've been seeing typically. So on most other stocks, I've been assigning about a 10% bias off the open, whatever direction the open happens to be. Here on Nvidia, I'm going to go ahead and assign about 20% bullish bias off the open, simply due to the fact that we're seeing a higher than normal volume off the open, but it's not sustaining itself, right? It fades quickly. That's why I can only do 20%. Okay, we fade quickly and really no bias after that, at least in terms of the first hour and a half. We move through the day. Nothing. It's not good enough. It's not good enough. It's not clear enough, right? It's not clear enough. We're seeing kind of that pyramid, but we're seeing one red bar out of context bears. I'm sorry, it's not good enough. We come through here. This, I would argue, would be bearish bias, but we followed it up with kind of a wash to the green side. A very similar looking move, and it means this one's not out of context enough. So that's a wash. We head into the close, and this big green bar here, that's a rebalancing bar. We have to ignore rebalancing bars, typically. It's usually junk volume. So what we're left with at the end of this is that 20% bullish bias that we saw off the open. Now, bulls, that's not the end of the world, right? It's not like we saw 80% bearish bias on these little pull-ins and then zero, like very low volume on the upside moves, that would be a disaster. I mean, as far as the volume profile is concerned, if it was up 7%, that'd be fine. But as far as the volume profile is concerned, that would be a train wreck. That's not what we have. We have a 20% bullish bias approximately off the open. And then unfortunately, we just don't really have tremendous bullish bias that follows at really any point during the day, but we also don't have bearish bias bears. Okay, so, you know, I mean, what else can I say about that? It's a little disappointing on both sides. So let's move on to something arguably much more simple to follow and very, very effective. Okay, the psychological self-fulfilling prophecy levels, starting with the very easy 30-minute chart. You can see we have the white line, the 50-period moving average, the gray line, the 200-period moving average. Those two indicators have the most eyeballs on the 30-minute, the 4-hour, and the daily. So that's what we're going to look at because, again, the self-fulfilling prophecy mentality, I don't care about obscure indicators. I don't care. That's not what I believe TA is. TA to me is all psychology. I want what other people are making decisions around. Hence why we're doing it this way. Now we look here, starting with the 30-minute. Guys, we pulled away hard. Now, this is one of those things where it's like, okay, what really matters played out well today, the price, right? But we're left in kind of a weird situation when these things happen. You start getting left in a situation where when the dust clears, if you still want to trade it, you're kind of high and floating on midair. At least that's the perception of the other side. So you'll commonly hear me say when we get into situations like this, where something's on a tear, I need to see some feet get up underneath the move. Otherwise, the bears have too good of a technical, psychological argument, at least in the very short term. Long term, fundamentals, and midterm, fundamentals are everything. Nothing else matters in the long term. In the short term, it is all psychology with short little periods of fundamental repricing that quickly turn back into psychology. So, that being said, bulls, we don't want to give bears any reason to be questioning this. How do we do that? How do we discourage bears? Get as many psychological levels of potential support as close to the new price as possible. Tomorrow, what I'm looking for, I want to see that 50 period, the white line, move as high as possible, as aggressively as possible. You can see it's picking up the pace here today. That's good. If we can see that continue, gain, 1100, of course, then 1110, 1120, 1130, 1140, maybe even 1150. Every psychological or round number, like maybe $10 increment here on the 30-minute at least, that's a little check, right? Because now you have an ascending level of potential, no guarantee, potential psychological support. We get that on as many different charts as possible. And now you're collecting bears, no matter if they're looking at the 4-hour, the 30-minute, the daily's going to take its time, but maybe the 1-hour, whatever. You're collecting bears who are all seeing a similar thing and going, that's going to cause a problem. That's what you want, right? You want as many eyes as possible thinking the same thing. And you want bulls to be encouraged, not looking at this thinking, I'm terrified, let me sell everything, right? You want as many people looking at the chart and thinking the same thing that supports your position, at least in the short term, as possible. So, get that 50 period, continue to ascend, but really important, bulls. If we retest the 50 period tomorrow, you want to see that bounce on high volume. Now listen, bears, the 50 period, it might come upside hard tomorrow. But bears, that doesn't matter if you can get down through the level and claim it as resistance. If this continues upside aggressively, and you like jackknife down through it on big volume, maybe you come back up and retest it and then reject again on big volume, that's fine. Now it doesn't matter that it's ascending because you got through it hard on big volume. Bulls, it only matters if you can hold it as support. So that's what I'm looking at from both sides of the ball here tomorrow on the 30-minute. Now the 4-hour chart, I'm not going to spend a lot of time here because if we look We are currently about 15% away from a retest of the 50 period. All I'm watching here, bulls, if we can continue to get that 50 period to ascend at a more aggressive pace, if that thing can reclaim 1,000, I'm thrilled. I just want that on track to continue upside to get another set of legs underneath the move as soon as we possibly can. Let's move to the daily, the most important chart of all. The daily has all the eyeballs. Everyone's watching the daily. It doesn't matter who you are, okay? And that makes for the most simple and most clear story. Listen, guys, you might be a really advanced trader. The daily is where you get humbled. And what I mean by that is it's really important to simplify your thinking when you're looking at the daily. Because if we're after the psychological big story, you have to understand that not everyone's looking at this with your eyes. Not everyone's looking at this with an advanced mentality. In fact, most people are probably looking at the daily with a simplified mentality, and you know what that does? That snowballs. Now, the more advanced traders are like, well, I got to look at this with a simplified mentality. Now, the small hedge funds are like, well, you know, we know a lot, but everyone's looking at this with a really simple mentality. Now, the big hedge funds, the big institutions are also doing it, and they're programming their algorithms to do the same thing. It all snowballs into a simplified version of itself. Self-fulfilling prophecy mentality. So, what's the story here on the daily? Well, if you guys remember the weekend video, what did we talk about? $1,100 is huge. Was huge, is huge. We reclaimed it. That's a big, big win, short term for bulls. But bulls, it's only a win if we can hold it. Okay, bulls, if we retest $1,100 tomorrow, we need to hold $1,100, at least ideally. If it breaks downside, it's not the end of the world. I mean, look at this recent run. But I want to hold $1,100 a share. Okay, $1,150, a break and claim of $1,150, beautiful. The stock was up $74 today, so I mean, we have to consider, at least mention $1,200 a share. No one expects $74 every single day, but $1,200 a share is clearly a possibility. At least it's on the table. So, bulls, if we could claim $1,200 a share and test it and hold it as a support level, that's a ridiculously big win, at least for that particular day. In this case, maybe tomorrow. Bears, for you guys, how do you guys turn this around? Well, if we can test 1150 and reject it, that's great. The big story, bears, at least like tomorrow, if you guys can crack 11 to the downside, $1,100, and hold it as resistance, that's a win. Because bears, you know, 1,000 is the biggest level we've seen on Nvidia ever, I think. Post-split, that turns into 100, which is still undeniably a massive level, okay? So bears, 1,100's a big deal, but 1,000 is like, if you can make this a 3-digit stock as soon as possible, maybe even pre-split yet again, that is a tremendous momentum shift. That's a big win. But bears, that all starts with breaking $1,100 to the downside. Bulls, don't tune out when I'm talking to the bears, right? I mean, this is what you don't want to see. This is arguably more important than the bullish conversation for you bulls. Bulls, you don't want to see 1,100 break. Okay, bears, that's your ideal here tomorrow. Now, implied volatility, very important if you're trading options. Very, very important. Big bounce here today. Obviously a volatile day that drove implied volatility a little bit higher, even though it was an upside move, which, by the way, if you're just getting into this, or you've been doing it for a while but might not know this, IV tends on, it's a little higher, how do I put this? It tends to spike more aggressively on downside moves, on equally sized downside moves than it does for the same size upside move. The reason is the market tends to price in more volatility when the market's crashing or moving down. That's because the only thing more powerful, I should say, I don't know if it's more powerful, but the only thing that people might act on more quickly than greed is fear. Okay, and we see that play out a lot in the market. So when IV spikes on an upside move, understand that's a little bit less common. But either way, in relation to the last week, in comparison to last week, we are now about in the mid-range. Okay, compared to the last month, we go back approximately a month, we're about in the mid, maybe someone might argue a little bit lower range. In comparison to the last 3 months, I would say we're about in the mid, slightly low range. Okay, so IV's not really at an extreme right now, but it's a little bit lopsided. Important to understand where IV lies if you're trading options, okay? Because it impacts how it's priced, how your contracts are priced. But always remember, guys, you can't compare IV to other tickers. Always compare IV to itself, and for that particular trade, always compare IV to the intended trade time frame. If you're taking a trade for a week, why are you comparing to where IV is in the last 2 years? On the flip side, if you're taking a trade for 9 months out, why are you looking at where IV is compared to a week and a half ago? Right? Context is the name of the game. Now, expected move here for tomorrow. Unfortunately, we do not have daily expirations on Nvidia, though I believe they're coming in the next decade. We do not have them yet. But we have weeklies. So, the expected move we're going to get tomorrow with a little bit of educated guesswork. That's part of trading, though. So, welcome to the market. But if we take a look, we have 3 more trading days left. Okay, so Friday's expiration, the expected move by Friday's close, compared to today's close, is plus or minus $47.42 per share. Well, let's try to get tomorrow, at least to the best of our ability. Divide that by 3, right? Wednesday, Thursday, Friday. But that assumes all green days are all red days. That's a silly assumption. We can't make that assumption. So we add back 50%. That gives us a plus or minus 1 standard deviation expected volatility being priced in by the market by tomorrow's close compared to today's close of plus or minus $23.71 a share. That's the approximate expected move being priced in by the market here today. The volatility expectation for tomorrow. That's the baseline. If you think it's going to be higher than that, or you think it's going to be lower than that, and you also have a strong directional bias, hey, maybe that's a position for you. If you very much so agree with expected move, by the way, that's not ideal. You don't want to change your outlook just because it doesn't offer you a position. That's like just itching to take a position. That's a very silly way to trade. We obviously wouldn't want to do that. But if you agree with it, fine, you agree with it, but that doesn't really open up a window, right? So disagreeing with the expected move is actually maybe a good thing if you genuinely disagree. Last thing here, you might be saying, well, that's great, but directional bias, right? Well, let's look at volume. 2.16 million total contracts traded today. 1.35 million were calls, and 811,000 were puts. So we are seeing a call side bias, a bullish bias on the overall call put ratio here today, but we start breaking that down by time frame, which we do every day. This video is geared toward tomorrow, so we have to do that, right? The 0 to 20 delta range, that's going to be the highest concentration of short-term speculators. 466,000 calls, 459,000 puts. It's even. It's about 50-50. We see a call side bullish bias on the overall. But when we start going short-term speculators, traders are split almost 50-50. Okay, but how do we get that bullish bias on the overall then? That's coming from the 41 to 100 delta range. Well, actually 21 to 100 delta range. So 0 to 20 is going to be the furthest out of the money contracts, right? 21 to 40 is going to be out of the money. Not quite as out of the money. 41 to 60 is at the money. 61 to 80 is in the money. And 81 to 100 is deep in the money. A lot of those are going to be leaps, long-term equity anticipation securities. All of those, all the way from 21 delta to 100 delta, is leaning call side. So like the at the money, that's going to be more like the midterm outlook on average, at least if you take the average expiration. The in the money, a little bit more long-term. The deep in the money, even a little bit more longer term. Okay, and those are all leaning call heavy. So the only delta range that we're seeing really the indecisive traders is the 0 to 20, which again is not all short-dated expirations, but it's the highest concentration of short-term speculators. Think of the 0 to 20 as kind of like the biggest concentration of the gambly style calls and puts. Like, those are the people that I want to see, at least on a big enough sample size, right? That's what I really want to look at in terms of the very short-term outlook of the market. Where are these people betting? And believe it or not, where are these institutions making bets? And yes, there's going to be hedges in there. You might think an institution's buying expiration or calls or puts that expire in 2 days. Well, yes, but they're not always just naked bets, right? They might be hedges. And I get this question a lot. Here's my thought process on this, and I think this makes a lot of sense. Typically, hedges aren't made unless there's a reason to do so, right? So let's say an institution has a massive long position on Nvidia. And let's say for the next week, they see choppy waters and they want to hedge some downside, at least potentially choppy waters. So they're like, well, let's hedge some downside. So they buy some short-dated puts to hedge. Okay, it's not really a short-term bet that they expect to make money on. Ideally, they would lose money on it, but they're hedging it. They're buying insurance. Okay? They would like to still have a fund tomorrow if things go the wrong way. So they're buying insurance. But that doesn't write off the short-term sentiment, right? They're buying insurance for a reason. So the sentiment is still the same. It doesn't break. Okay, so listen, this is a really interesting options volume data profile, whatever you want to call it here today. These ratios are very interesting, and it's over 2 million contracts, so it's a big sample size here of data. It's good. Listen, guys, there's still a little while left, at least a few days here, but it's not going to be tremendously much longer to get grandfathered in at what's going to become the old rate for the private community. That's where I send out my daily scalp setup alerts. Those are my personal scalp setup alerts, by the way. My in-play stock alerts, human verified by me before every alert goes out, unusual options activity, and of course working with my platinum one-on-one group. Again, that link in the pinned comment, that'll let you get grandfathered in at the current rate. If you do so, or you're already an existing member watching this, nothing will change for you as long as you retain your membership once the new payout structure rolls out. It will only change how new members are onboarded. You will stay grandfathered in at the rate that you join at. So thank you guys for being members. I greatly appreciate it. And hey, if you appreciate the daily Nvidia videos, please, all I ask, it's free. Leave a like on the video and then get out of here and enjoy your day. I appreciate it, and I'll see you in the next one.